is time to discuss with Gonzalo Cañete all the latest news affecting the Forex market. Hey, Gonzalo, how are you?
Hello, Alba. How are you? Nice to be here with you.
The Forex market, one more week connecting with you. Gonzalo Cañete, Chief Strategist at ATFX Connect. And, well, we have to start compiling because we didn't have a program last week. It was Easter week, and there were some little things that happened. There was a movement in the markets. There is a little bit of dissonance. The dollar is rising, and on the other hand, for example, the stock markets have not fallen much yet. So, well, I think we are going to start first with Europe. Then we move on to the US dollar and top it off with oil and commodities, metals. Is that okay with you?
Great. Yes, that's perfect, of course.
Let's go.
Great. So on the European side, we continue to see that the equity side, the stock market, the equities is super strong. We are in a DAX with above 8,400 points, if I am not mistaken, which is still surprising because the data that is being published, the ones that are being published, the ones from nothing, the ones that have come out this week in the PMIs, for example, were disastrous, really disastrous. Germany was at 41.2%, 41.9%, brutal, pitiful. France was also low. Paradoxically, Spain and Italy were somewhat better. Those PMIs and those of the powerful economies, we already know that Germany is the number one in Europe. Then there is the United Kingdom, which is no longer Europe, and France, which is the third. In this case, we have France and Germany with bad PMI data showing economic contraction below 50. And in the case, I insist, of Germany super low, but paradoxically, not those of the United Kingdom. The United Kingdom, which was the one that was going to sink after the Brexit, is the one that is showing that it is surviving, that it is coming out. The British economy has shown a rate of 50 with something not very high PMI either, but at least in expansion and not in economic contraction. So, well, it is surviving. We have said in growth data, for example, the UK economy looked very much like Germany's because it has shown some sidewaysness, but they are showing that they have much better resilience in terms of consumption. The labor market, for example, is quite a bit better in the UK than in Germany. What we are seeing is that it doesn't seem to be catching up with the situation in Europe, that Europe, we already know, has gone into a kind of debacle of a downward spiral in which it has been since the Ukrainian war started, because we were promised the end of the Russian economy, sanctions, this, that, the other. And the only thing that has happened has been practically the opposite. The IMF reformed the growth rate upwards, but in this case, that of Russia, while the growth rate of Europe has increased.
That is why the dissonance I was talking about earlier. And now to end the space, the issue of, and just as the dollar is going up, oil is going up, gold is going up, Bitcoin is going up, which is also against the dollar. So all these assets that are against the dollar should have some adjustment, some correlation. When the dollar goes up and those assets keep rising and do not correct, that is for a reason, right, Gonzalo?
Well, sure, no question, no doubt, obvious, sure. There has to be a factor that we are not including in the equation. That factor clearly is, well, we have seen, for example, the last few weeks, week and a half or weeks, when we have seen rallies in the price of crude oil, the argument that they were giving us was that they were probably due to increased tensions in crude oil supplies globally because of the attacks that Ukraine was doing against Russian refineries, because they had attacked one of the most important ones. This weekend, we have seen that again, there were attacks. A drone apparently hit a refinery in another new region of Russia, and it would also be the first time that they have had a drone instead of a drone. It was directly an unmanned drone, but that could stress the crude oil market. But gold is also aesthetically high, and it is incompatible, this, as we have said, with a dollar that continues to strengthen and continues to rise, because it would tend to make the commodity cheaper, not increase its price. Therefore, I believe that it is the geopolitical factor that is causing both gold and oil to continue to rise, because we must not forget that in recent months, the lesson we learned was that there was a significant increase in gold with the Hamas attack on Israel, with everything that happened afterwards, because it is almost always assumed that we will have some kind of military conflict in the middle and gold soars. In recent times, we have seen it, for example, when the attack occurred during the Trump administration from 2016 to 2020. That attack against an Iranian general triggered the price of crude oil, in the price of gold in a matter of 2-3 days, super high, very bullish. And I think what we're seeing, for example, is that over the past weekend, Israel, for example, bombed the Iranian embassy in Syria and killed Iranian military and state administrative personnel who vowed revenge. And therefore, I do not believe that we are close to a de-escalation in geopolitical tensions. And we must not forget, we have repeated it in this program more than once, these are two regions that from a geostrategic point of view are fundamental in the energy aspect, because a war between Ukraine and Russia, or NATO and Russia, is a war against one of the largest producers of crude oil, which is Russia, and a war between Israel and its enemy, which is Iran. Iran is another major energy producer in the Middle East, therefore, and not only does it produce energy, but it affects the export routes of Brent crude oil, Brent barrel, which is the Middle East. So Yemen, Saudi Arabia, that whole area is the one that could probably be complicated by the Strait of Hormuz if there is a conflict. Not only is it Iran's production, but it is also what militarily Iran could do to break the energy supply chain to the West.
Well, you're already hearing it. This decorrelation between assets is nothing more than geopolitical risk. And, well, it's something we have to take into account, isn't it? Because then come the scares and then come the adjustments. And when we are in such a bubble and there is so much optimism as underlying, we have to look around and see how the situation is, the outlook, and how we all are. And it is true that, well, if someone has reasons and motives to have one of some of the ones above the 5,300 or one of the 18,400, well, I would certainly be more than protected. At least nobody says to sell, but at least to protect them. And let's go into a little risk-off mode. Very well, Gonzalo, that is what we are going to stay with these keys. And we are very much on the NFP, so next week we will comment on the whole NFP issue, the United States, dollars, we will follow the dollar a little bit more, all of this.
Very good, perfect. Well, Alba, thank you very much for counting on me. Take care.
You're welcome, as always, take care. See you next Wednesday.